We're
things.
really a niche boutique.
Yeah.
When I say a niche boutique,
Yeah.
we primarily work with people in the second half of their life.
Yes.
We call them responsible savers.
Yeah.
We work with entrepreneurs, people who have small businesses, and we work with a lot of executives, or professionals. And so a lot of people that are doctors, lawyers, accountants,
Yeah.
very common small business owners,
Yeah.
but a lot of people that are getting ready to pre-retirees that, like, two of them may have worked at the FBI, or they may have worked at WVU, or they may have worked for an energy company.
Yes.
Because, the thing that a lot of people are facing that's so different than when I came into the business.
Mm-hmm.
When I came into the business, people still had pensions.
Yeah.
Retirement wasn't as big of a deal because, number one, people didn't live as long, and they didn't have to have an other income source.
Yeah.
And so what I realized early on was that I went and got a lot of training. And I got training. I got certified as a certified wealth strategist. I became a certified estate planner, an accredited investment fiduciary. And so a lot of my training became unique and specialized for people that were highly successful and also people that were in the second half of their life. Because what the unique challenges are is that when you're taking income from a portfolio, and let's say we have a 2008, well, unfortunately, that changes the game, because if the markets go down 50% and you're taking income out of it, well, you may not get the same recovery. Yeah. And so what a person taking income does versus a person accumulating money should be totally different. Mm-hmm. And because of the fact that someone that's in the accumulation phase, they have time to recover, they can make more mistakes. Yeah. My clients, they're super, super dependent on this income, because this income ultimately dictates their lifestyle. Sure. And so the other thing that we do other than retirement income planning is tax planning. For people, the more taxes you pay, the less money you have to live off of. Right. And so one of the big things is that the more we can save you in taxes, the more net income that you're going to get. Sure. And so that's the core of what we do is retirement income and taxes. And I'll explain a little bit about our process. The first step in our process is what we consider to be our Basecamp. And in Basecamp, we want to get you organized. Mm-hmm. And as an example, we had a person come in just recently. They inherited all this money. They had no idea how much they had, no idea where it was at. But what we found was they had about 50 different accounts. And so the first thing we did was we got all this organized into one portal, so they could see everything they had. And this person was absolutely stunned because they had no idea, because they had all these 50 different statements. And so getting people organized so they can see a big snapshot is a big deal. Yeah. Then from there, we wanted to gain clarity on their vision. Because for most people, we call it the financial summit. Everyone's financial summit's going to be totally different. Sure, yeah. And then
that's why it's called personal finance.
Yeah, that's exactly it. And then the next thing is we got to get clarity on challenges, because not everyone's aware of the things that you need to do. Yeah. And so if we agree at that point that, hey, look, this makes sense. Now they get to see a snapshot. Now we know where we're going. The next step is putting together a focus on them, and usually them and their spouse. And what I say about that, that goes into the retirement income strategy and their taxes. Then from there, what we do in our next step, we call it the outlook session, is now we're going to elaborate on their family. Because, we know that, hey, they're taking care of themselves. We've elevated their lifestyle. We've reduced their taxes. But what happens if one of you're gone? Yeah. What happens for your children? Yeah. Because like myself, I have 3 children, and my children are young. And what I always ask people is, once you're gone, okay, what do you want to happen for your children? Do you want them just to get the money straight out and just spend it? Do you want to get it on a graduated basis where they get it over a period of time? Or would you like to create a perpetual income for them for the rest of their life? Because depending on how you do that is really going to depend on how you set up your estate. Yeah. And do you have any gifting things you're concerned about? Sure. And what happens if you become incapacitated? What happens if you become or end up in a nursing home? And so that's the next step of our process. And then the last step of our process, which is not applicable to everybody, but if you own a business, you got a whole new set of works.
A whole other layer.
Yeah, man, that's a whole other level. Because what most people don't realize is most businesses don't end successfully. They end in disaster. 76% of all businesses actually end in disaster. And when I say this, it's either at death, a disability, something that, or a financial disaster. It doesn't, so I see people all the time that are highly successful. And they think, oh, you know what? When I get out here at the end, I'm just going to sell my business. I'm going to sell my equipment. And what they find is what they think may be worth $5, $10, $20 million, nobody wants to buy it. Yeah. Because no one's going to buy 20-year-old construction equipment. No one's going to buy things that they made money with and made great income.
Yeah. Well,
but people aren't going to give you that value.
That's right.
And so you got to have a succession plan. If you're a executive, a lot of times you get extra bonuses. Well, you got to figure out, how do these executive benefits turn into income? Yeah. If you own real estate property and you're trying to get out of it, and now you got to say, okay, well, how do I, because when you're younger, you don't mind the maintenance of real estate, but then when you get older, you're thinking, wait a minute, I own 30 properties. How am I going to maintain this? Do I want to be a part of that? So a lot of times people say, how do I convert that to an income benefit, but not lose out on big taxes?